Yeah, sure. My name is Hanan. You just saw me. I don't have to introduce myself. But just before we hear from the FSPs, I need, when we're talking about regulatory environment and policies, we need to talk about the international standard setting bodies. Because as Alia said, a central bank, whether in Uganda or Kenya or anywhere in the world, will not do policies that will jeopardize their status with the international setting bodies. And AML and financing terrorism rules are sometimes weird, to say the least. And the way you have to provide evidence is so silly, because if you want to do terrorism, you're going to do terrorism outside of the banking system. You're not going to go say, I'm a terrorist, I want to do this. So I think a lot of the international funders and the international organizations can help with advocacy with the international standard setting bodies, and maybe bring them to the conversation as well, because I think it's a chain of things. We cannot ask central banks and policymakers in the country to do something that will harm their country vis-a-vis Basel or vis-a-vis AML, the FATF, or others.
Maybe just on that very specific and technical question for information, Yousra Hamed SPTF. At SPTF, we have an investor working group which works on a variety of topics that are important of the sector. One of the working groups that were suggested in the last meeting to create or recreate is a specific working group specifically on AML, KYC topics, because of course that is one aspect, but globally the entire aspect of KYC and AML is extremely complicated, is taking extreme amounts of time and resources in a totally inefficient way. Everybody sits on the information that he's gathering. So just an invitation for anybody on the investment world who is interested in trying to get this AML KYC topic more efficient and better, reach out to myself or on the SPDF webpage. That specific topic, of course, of the total discrepancy of regulations for certain countries, which is okay, it's another topic, but maybe we can also, as an investor working group, contribute to that debate. And certainly very happy to do so, because there's, of course, a bias which is disfavoring a lot of the countries that we are working in, which has no justification to continue to exist. So it may be, we can certainly only do a bit of it, because we are certainly small in the global financial market. If you say about Bali, etc., of course, we are not at the level, but we are also those countries who are mostly exposed to those countries. So just reach out.
Great.
And happy to attend.
So after this publicity page, you know, Jürgen, you can reach out to him.
Go find him. If you want to talk about KYC, everyone's
Exactly.
favorite topic.
He is the man.
Yeah, thanks. I would like just to add on what my predecessors said, and I would like to request that in philanthropy and the donor side, if you could advocate more for localization, because I've been in the core group that developed the multi-stakeholder pledge on advancing localization in displacement and statelessness responses. And I was honored to announce it during the last GRF in the plenary session. And I keep advocating for that. So if you could add your voice on that, that would be great. Thanks.
Thank you, Paul. The other Paul.
Yeah, thank you, everyone. Good afternoon, and thank you for the discussion. My name is Paul, as Yousra said, and I come from the finance sector in Luxembourg. So maybe my question will bring back the discussion to the other side of the equation. It's not a secret that humanitarian needs are increasing, and everyone is looking for new sources for funding, including some of the agencies and international organizations sitting with us today. And everyone maybe is looking also to capital markets to see how capital markets can help. And what we see is that despite the fact that some investors be interested, but it's very hard actually to identify those investors. So my question for all of you, but maybe more for Kiva, who are those investors actually at the end who are willing to invest in a product, like maybe the fund that you have created or any other instruments that we might have in the market? And if there are, how do you manage actually to satisfy their investments needs? So pay them back. And my second question is on the reporting or the impact that you're doing. If you can maybe share with us, how do you do this? What are the challenges in it? That would be great. Thank you.
Yeah, great question. I think one of the things we're trying to do is be that intermediary between the investors, especially in the US and to some extent in Europe, to help them bring their capital to the refugee financial inclusion space. Our goal is that if we can continue to demonstrate this, someone else can go and do it either directly or launch a larger fund than us, and that would be great. Then again, we've done our job. But if we look at our current refugee fund, it's quite a diverse mix of investors, from family offices to high net worth individuals, foundations, and including the US government. So it's really a mix of all those who have come together. And I think that's one of the powers of what we're doing there. But we've now seen some of those investors go and invest directly in FSPs as well, which is great, right? They've started to know this work maybe through us and through the fund, and now they're able to also go directly. So it's just a start. We're newer in this space, but it's something we're definitely looking to grow and continue to scale up and build. And so the more we can crowd in investors and collaborate with both investors and bring in philanthropy in a complementary way, that's going to continue to build out this space. On the impact measurement piece, that's a really good point. And I think, again, back to Philippe's early question, or kind of what are the challenges? We don't have the same evidence base in refugee financial inclusion that we do in some of the other areas of microfinance, right? It's not as studied. We haven't built out a research or done the research. And so one of the things that we're especially focused on doing now that we have this fund in implementation is looking to actually see the impact of loans on refugee households pre and post loan. So we're launching a 2-year longitudinal study in Colombia to start. We're hoping to scale it into other countries that will look over a 2-year period, pre-loan and post-loan. How do income levels at refugee households change, education levels of family members, health, living conditions, and so on. So we can really understand A, the impact that this work is having, but also B, when and where it is most impactful, and how we can use that to design our work moving forward.
I'm going to do 2 plugs. So the first is there's going to be an incredible forced migration review journal that's coming out in November focused on refugee financing, which is going to ask this question of, there's not enough humanitarian aid, what the hell do we do? And so it's going to be different perspectives on innovative ways of thinking about refugee financing. So stay tuned, FMR, November release date for some really interesting articles.
November of next year?
No, this year.
This November. Okay, great.
Wow, it's November, everyone. I'm an American. I'm in a blur. It's been a nightmare. Sorry. So it's November. So at the end of this month, it'll be a release date. I think it'll be some really good food for thought to your exact question. The second thing I'll point out is there's actually a cool initiative from WEF called the Humanitarian Resilience Initiative, HRI. And what it's doing is crowding a bunch of investors that are interested in frontier markets. And then what they've asked myself to do, and I've brought in the Refugee Investment Network, is we have a community of practice specifically for refugee lens investing. And so it's a group of investors and people like Kiva and others that have set up funds that can take private investment to talk about the different challenges, the different issues. We're going to have a session on metrics soon about what does impact look like for refugee lens investing. And the idea is we're trying to get as much people interested in that as possible to try and say, here's a group of folks that are interested in looking at this blended finance approach to sort of refugee issues, a lot around financial inclusion, a lot around self-reliance, some about health, things like that. And so it's a nascent community of practice, but if you're interested, come find me. But this exact idea, and then particularly for us, we're like, how can philanthropy play a role as we can take on debt and first loss and when we do our investments to sort of then say, okay, private company, like if we take this first investment, will you come in with a second round? And so there's a lot of conversations about that now. And we're trying to get, again, the gender lens investing space has been at this for a while. And so how do we add that refugee? So those are 2 pretty interesting things coming up, but great question. Yeah.
I'd like what you just said about, refugee lens investing, but it's not just about financial services for refugees. It's about employment, about access to other services, etc. And I think that makes it more viable also from an investor's perspective, because you will have different things that you can invest in that will make life easier for refugees. For example, we're now looking at models where it's about setting up companies or financing vehicles that can take investments to improve access to renewable energy in refugee camps and host communities. And so there is a lot of innovation going on the job tech front on different issues. So I think for investors that, we have a lot of investment funds that come more from the financial inclusion, microfinance space, but all of them are also looking at diversifying. So it can be interesting to take the refugee lens as an entry point, but to go beyond financial services and look at other things. But we're at Microfinance Week, so I'll stop about
I've been trying to be like, because there's also a whole group of climate lens investors that are gaining a lot of traction and a lot of money. And I'm like, what's really important about climate? Displacement. And so also trying to like stick our nose in the displacement investing space as well. Yeah. I mean, the climate investing space. Yeah.
I have a question on the impact. Impact is, of course, at the level of the refugees or of the population that you are serving. But also what I found interesting is your crowding in. This is also impact.
Yeah.
So how many, or what is your evaluation of your impact as Kiva with the different tools you have? How many purely commercial investors have you been able to crowd in, and in which countries?
Yeah, I mean, the reality is that on the purely commercial level, none, right? It's still definitively impact investors who are investing in our fund. And what we're trying to do is never going to be market. We're never going to be offering commercial returns. That's just not where we see ourselves in this space. We are definitively impact first. That doesn't mean there can't be opportunities that are more on the market side and can match commercial returns. There are those investment opportunities, right? Like you said, it's not just financial inclusion that we're investing in. We're investing in companies around job creation and so on. But where we are, it's really very much, while we're engaging with the private sector, it's impact first at the core.
Your last chance for your last question. Sorry, Alia, and then perhaps we will see the time, perhaps.
I'll be very short. I think that one of the learning also we have is that we have to stop working in silos. And actually, there are some very good practices, and I want to mention the Prospects program that is funded by, amongst the donors, the Netherlands Foreign Ministry. And I think that it's great because looking at Swati, if we want to look at financial health of the forcibly displaced, we need to have a multi-stakeholders, multi-sectorial approach, and therefore having the ecosystem working together is essential. It's not about the microfinance institution alone. We have to deliver financial literacy, financial education, digital literacy, and so many other financial services. So again, I think it's really good to look at those case studies, lessons learned, and disseminate further the good practices. Thank you.
Thanks, Alia. Do you want? Okay, so please, you will be the last. We'll have the last question here. Yeah.
Thank you very much. So I think most of the discussion is based on a basic assumption that I'm Erdal from Frankfurt School. Sorry. So the basic assumption in our discussions, there are financial service providers willing to provide services for the inclusion of refugees, but they don't have access to funding or they don't know how to do it. And the question is, okay, what we can do to support these institutions. But then the question is, what if there is no financial service providers in the country who are willing to invest in the inclusion of refugees? Let me be more specific. I'm coming from Turkey. And unfortunately, in Turkey, we don't have not a single financial institution willing to invest in refugee business.
There's one.
There is one, sorry. Who?
Turkish Grameen Microfinance Program.
Okay.
Excuse me, but their share, I think it's like 1 in 1 million or something like that. And unfortunately, in Turkey, we don't have a microfinance law, so nobody is recognizing this foundation. It's not about lack of funding, because Turkey or our financial institutions can get access to large amount of funds. It's not about lack of capacity. They do have the capacity, but somehow it is related with increasing public tension.
Yeah.
Because in the society, people are still believing in that. Why are you supporting refugees? We as a Turkish people, we are poor, we are in need of access to finance. Then why are you spending all money for the refugees?
Yeah.
So what will be your strategy in such a country? How we can ensure that there are also some inclusive policies in countries like Turkey?
Perhaps I'll just jump in this with, and again, Uganda, and something where I was so impressed about is that at the smallest level of the administrative decoupage of the country, the government officials and the public service staff, they are aware of the benefit that these refugees are bringing in terms of development to the areas. The fact that Nakivale, if there's no refugees, won't be on the map as one of the biggest settlements and won't attract as much funding that comes for infrastructure, for livelihoods opportunities for refugees, but also for host communities, sometimes even more. So this, and I think it's coming, I mean, and the colleagues from Uganda, you can tell me, it is coming from the top that there is this realization that refugees are coming with opportunities, not only with challenges. And the fact that at the highest level to the lowest level of the administration in Uganda, they are realizing that it is easing the social cohesion and facilitating the social cohesion. So I don't know how much it is transferable to Turkey. I don't know.
There's also a lot of data that shows if refugees can actually contribute to the economy, right? If they have money to spend,
Yeah.
that's going to be spent in the local economy. There's like huge data on that. So I think it's also about, you can choose to have refugees not contribute to the economy or contribute to the economy. And so it's thinking of it in that way.
Yeah.
I'll also just flag, I think when we all speak up here, when we're speaking about refugee programs that we support or run, it also includes host communities, right? There is no funding
Yeah.
that I give out that is exclusively for refugee clients and beneficiaries. So all the projects that we work on are have a huge percent of host populations, right? And often refugees settle in the poorest areas where host populations are also poor. And so thinking about that sort of rising tide lifts all boats type angle, but just to point out that we use, like, I wish my initiative was called Refugees at Host Communities and All Forced Displaced, but it's too long. So it's just Refugees Initiative, but it's meant.
I mean, I really relate to this comment, and I think in all European countries, we have the same
Yeah.
negative narratives about
America,
migration, about refugees, and they're often, most of the time, not based on data. Data is saying the opposite, and so we cannot solve it just through more data, because if you don't want to believe the data, you're not gonna see it. And so I don't have the solution either. I think there is a lot to do through advocacy. I think, stories that like the ones we heard earlier this afternoon or this morning from people, speaking up, and thank you for that, from organizations who are pioneering and actually changing the mindset, sharing their stories, advocating. I mean, I think all of us here, we have to amplify those voices and shout against all that noise that is negative about migration and the refugees out there. But I think it's a big challenge. So I totally relate to your comments.
And I know we have to wrap up, but talk to Al Majmua and MFW here about how they've incorporated host communities and refugees together to change the mindset. I don't know if we have time, but I know Badur is.
They are. Ricardo, you wanted to say something.
Yeah.
So we had the last question. Now we are having the last comment.
I think there was one more comment after.
Sorry.
So if Ricardo, you could be quick, and then we could go to the next comment.
I think the general approach should be local economic development, right? So we are talking about to what extent, I mean, I don't like sometimes when we don't define exactly what is the host community, But because it's hard to, to define. I mean, it's geographical space, it's socioeconomic dynamics with the local businesses. So we have to do that. It's actually something that we need. But moreover, we have been working, for example, with inclusive SMEs, that SMEs that are basically locally based and actually are hiring refugees. They are doing business with them, or they are actually, in some cases, for example, in Poland, we are working with Santander Poland, and they are lending to SMEs that are doing business in Ukraine, also doing business with Ukrainian business women. So I think we can extend our approach. We don't need to label so much, but basically we need to be conscious about and more understanding about the dynamics. And moreover, we are very, I would say, adverse on the informality. And it's informal economy that actually is hiring these refugees. It's informal economy that has contributed to general GDP anyway. So we have to recognize that. So in Turkey in particular, for example, and we are exploring that, we know that there is, that kind of reputational risk from the financial institutions, but we also explore that in other contexts. Sometimes the offer doesn't have to be so visible, but it has to be well communicated enough for the clients to know that there is an offer. And most of the refugees, they are very much organizing networks. So we can use those to promote what your institutions are offering.
Thanks, Ricardo. Budur.
Budur Microfinance for Women, Jordan, to comment on that question related of people who would feel uncomfortable for an institution to provide its services to refugees. For us, it was not really the case because people would, say we are against scholarships, grants, free things, but alone, no, we really didn't experience such a thing because for them, they perceive a loan as a heavy duty thing anyway. So they didn't see it as a privilege anyway for refugees.
Good point.
Thank you, Budur. Thank you very much. So this is the end of the second part. We will have an additional couple of minutes. Don't go away. I'm going to leave you with capable hands of Reza and with the last part of this afternoon session, that would be the debate on guarantees. And please join me in giving a hand to this amazing panel. The floor is yours, third part.
Great. So I think a lot of people have been talking about this session. We've been building up to this. So I'm very excited now to kick us off. My name is Reza from Open Capital Advisors based in Kenya. We've been doing a bunch of blended finance work in the space. And so very excited to have a conversation on guarantees. And actually not just a conversation, we have our esteemed speakers here who are going to be debating the role of guarantees with regards to financial inclusion for FDPs. We have different views. Some view guarantees as essential to advancing financial inclusion. Some view it as counterproductive. So I'm pleased to introduce our debaters for today. On my right is Philippe from Grameen Credit Agricole, who will be Foundation. Who will be proposing the motion that guarantees cause more harm than good with regards to FDP financial inclusion. And to my left, we have honorable debaters who will be opposing the motion that guarantees go more harm than good. They will be saying that guarantees are good. So we have Budur from Microfinance for Women from Jordan, Analot from FMO, and Noah from Opportunity Bank Uganda. Opportunity Bank International Uganda. And so how this is going to work, obviously it's a mock debate format. Our speakers have very graciously agreed to play this role. And so maybe a bit of a disclaimer as well. Everything that they say here may or may not represent their personal views and certainly not of their organization. But I think the spirit of allowing us to learn more about guarantees, the effectiveness of guarantees, we do want to create this kind of conversation. I hope that we'll actually have time at the end after the debate to also discuss in a much more nuanced and balanced way in terms of the role of guarantees. But in debate formats, we will be keeping time. So each of the debaters will have strictly 5 minutes. I have a very helpful timekeeper with a bell who will be giving each of them a 1-minute warning and then a continuous bell once their time is up. So they each have 5 minutes. After the 4-minute mark, debaters, you will get a warning. In terms of structure, we will have Philippe going first, making the case and argument for why guarantees are not needed and how they are ineffective. And then we will be followed by the speakers from my left, who will be talking about why guarantees are needed. We will then have one round of rebuttals from each of the sides around this debate as well. Before we get started, maybe just a show of hands in the room. We'll do some live voting later. How many of you think that guarantees are absolutely essential to advance FDP financial inclusion? Cool. So Philippe, that's what you're up against. Let's get going. And just to make sure that we're all on the same page, when we talk about guarantees, just a very high-level definition, they're a de-risking financial instrument which effectively gives security to a lender when a borrower defaults. Obviously, there's more technical terms that we can go into later. So without further ado, I would be very pleased to welcome Philippe to start us off, and the time will start.
And I'm standing because we have to fight against these three of them. Okay, let's start. I'm doing it like this. Okay. So who believe that that refugees are not that risky, in fact, compared to the other one? So would believe they're not as risky as the other ones? Okay. So the debate is closed. And the majority of the people here believe that, and we have keep hearing all the time that portfolio at risk was not as bad or even sometimes better. And so that somehow they are not that risky, and I think it's my main argument. And then when I thought about it, I said, okay, how did Mohamed Yunus start in this program? With guarantee? No. What about Marianne Novak at ADI in France? With guarantee? No. Why? Because they had a vision. They have a vision that working with poor people and giving them the access to financial services was possible. And I think that the message I want to give here is to say that we need to have the same vision. If we want to work with refugees, we have to be able to prove that they are not as risky, that they are clients like the other one. When I started this program with the Foundation Grameen Crédit Agricole, each time I was talking with the FSP, they were saying, okay, we need the guarantee, we need the guarantee. I don't need to work with people that say the first step is to need a guarantee. You need to have a vision. You need to have a vision to say that if you work with refugees, it is possible. And it's not as riskier. So what I'm very happy is that we have been succeed in proving that, in the program, and I know that some of our partners might use guarantee, but they started without asking for a guarantee. And I think it's the first step, which is very important. How can you come to try to ask people to work with refugees and you say, okay, but don't worry, we will provide you with a guarantee? What is the message you are giving them? You're giving them, okay, they're very risky, so be careful. It's too risky to work with them. And we provide you the guarantee. It's not that way that is going to work. It's going to work if you're able to prove that, okay, guarantee might come at a certain page later on. But if you do work with them, we know that it's a sustainable program, that is not riskier, and that at the end, you can serve the people the way you've been working for the other one. The risk with the guarantee is what? Is that, in fact, either the institution said, okay, I do have a guarantee, so the way I work with the people, it's fine. I can take some more risk and so on. And then at the end, you increase your portfolio at risk because maybe you take more risk or because maybe you are not able to take the right decision. You might also help the people at the end to take themselves more risk and then become in more trouble time with over-indebtedness issues and so on. And I don't want to talk too much about it. So that's really this risk of putting things in a vicious cycle where at the end, you are not really solving the solution. I think it's very comfortable for the institution, of course. That's clear. That would be very comfortable. But what is the message behind you're going to give? Then providing guarantee as a cost. And then it's all the issues, who's going to get access to this, who has the capacity to do this? And I think that here we're going to talk about what Rufi was mentioning, that, small institutions might not get access to a guarantee because they are too small, because it's too complex to set up, and FMO is there, oh, refuse, too complex, and so on. So we will work only with the large institutions that have the capacity to do it, and not with the other one that really doing the good job and great job like Rufi you do in Uganda. So I think that it might exclude some institutions that do not have the capacity. It's working with guarantees is very complex. I will not go into the details. It takes time, it's very complex to set up. Administrative cost is very high and so on. So at the end, it really can be a big issue for the institution. We all say here that, okay, working with refugees, we should provide the same type of services than host communities and so on. That's very important. Yes, I know. So working with host communities, so why, and then in that case, so why for the refugees, we provide guarantee and not for the other ones? We create discrimination in these sectors. And that's not something we want to do. We have been talking about the need to work together and to be sure that we serve both host communities and refugees. So I think that at that level, it's very important to be sure that, I mean, what is the message we give? And that's my main argument. And that's this message which will make a difference. It's not if you come, we say, you need a guarantee. No, the message is that working with refugees is sustainable, is not risky. You have risk, of course, but the impact of this risk is not as strong as what we believe. And you said from the spin that the perception risk is really the big issues. And I think that going with the risk, you just put more emphasis on this perception risk instead of saying, no, it's not the case. Thank you. Good luck.
Thank you very much, Philippe. I think he's made a very compelling case, and I think he feels he's won with regards to why guarantees are not needed. So for the next 15 minutes, we will be hearing.
See, you have the point, guys. I mean, it's not fair.
We will be hearing why there is a case for guarantees, why they are needed, and how to make them effective.
Yeah.
So we'll start with Bidur.
Yeah, my first question, if it's that easy, why not all financial institutions are providing their services to refugees? You know, we are always building this case studies, business cases to invite them, please go and serve this important segment in our community. So my argument will be is that we're here to talk about, basically, let's put the basis of the argument, it's financial inclusion. This is what we want. And what does it mean? Financial inclusion is, it has lots of definition, but it's about giving an opportunity to have access to finance for everyone. So this is the basis that we should refer to when talking about guarantees, etc. In the morning session, someone has said that, or a refugee has said that it needs 10 years to go back to the level of standards that a person used to live in his country after being a refugee. I will add only if there is mechanisms of livelihood and they have access to financial inclusion, only if after 10 years. So this is the basis. Guarantees, it's as you said, it's a mechanism to address perceived risk at one aspect. And there's another aspect why guarantees. I will talk also about it. So for the perceived risk, there's always a perceived risk to start serving a segment or to expand or to scale. The beginning of each step of these is a perceived risk, regardless if it's real or not. And we need to encourage institutions to take this step to go to a new segment, and refugees is a new segment that there is a perceived risk about it. And if we compare the whole microfinance sector, when we started 30 years ago or 40 years ago, it was a huge perceived risk. And 40 years ago, most of MFIs started with guarantee or grant to take this step. But now we have very strong, sustainable MFIs who can provide. So starting with guarantee or a grant is not wrong if used or given to the right institution. It's a powerful thing. So from MFW, which started as a grant, but now a very sustainable institution, and looking at the portfolio of Syrian refugees, we started it with a guarantee from our board of directors, who said to employees, go and serve this segment, and there is 2 million guaranteed by us as a board. Without this, we would never do this. Our employees would never knock the door or give a loan to any refugee at the beginning. So we needed this risk sharing by the board to encourage our staff to start serving this segment until it's proven. And now it's proven that they are creditworthy, similar to other segments. And we took a loan that is guaranteed by EBRD that helped us expand. And now we are having a risk facility guarantee facility by EIB to help us scale also while serving refugees and women and other segments of the community. So it is needed to start, but if it's used correctly to the right institution, then it will be proved to be correct. So this being said, not each institution is ready to receive guarantees. There should be a checklist where, okay, do they have the risk measures? Do they have the financial capacity? Is it a driven mission institution or not? There should be a checklist before giving this tool, an important tool for institutions to go and do their job and do their work. So the other side of the question, why guarantees? So one of it is to start somewhere, to start for segment or to scale or to expand. But then after this has been proved after 10 years of serving refugees, why still there are organizations and MFIs who don't serve refugees? Because it's hectic. It's not an easy breezy thing. It needs lots of work, really. And not each institution would like to go to serve such tiring that requires lots of work. So we need DFIs to, okay, there are the elite of the elite institutions who can start by themselves, do the hard work by themselves, but we want them to increase the spectrum of players who work to serve this segment. So they need to support them with tools, including guarantees. This is being said again, it's not the only tool, but it is one of the important tools that would encourage any financial institutions to step in and start serving this important segment in our community. So my point is that it's an, okay.
Over.
Yep. Okay.
Thank you very much, Bidur. And I know, Philippe, you're itching to respond. We will give you your time for rebuttal. So we've heard from Bidur the perspective of a lender based in Jordan. Now we'll switch a little bit to hear from Analot from the FMO and broader DFI perspective.
For the people who don't know, does this work? Yeah, right? Yeah. For the people who don't know, FMO is a DFI, and we are investor to financial institutions. So we're really happy to hear from a financial institution that, yes, guarantees can be helpful. And I'm very happy that it says can be helpful, because it's not always for everyone. And I think you took a lot of my arguments, but they're perfect and on point. So yeah, I do believe that guarantees can be helpful for some financial institutions. And this is particularly because it decreases the perceived risks. And I'm saying this because it's perceived and it's not the actual risks. So what a financial institution usually does, and you guys can agree or disagree, they do a risk and return analysis. And for us, for a financial institution to serve refugees for the long term and in a sustainable way, the return has to be bigger than the risk. So imagine you're a financial institution and you think, okay, let's enter the refugee space. You look at the risks you might face. A lot of these are flight risk we talked about today, country, regulatory, operational, et cetera, et cetera. And these risks are big, right? They can lead to extreme unexpected losses. Again, perceived risk. It might not happen, it might not be actual. So then the financial institution comes to a conclusion and says, we're not going to do this, the risks are too big. In comes a FMO, for example, and we can provide a guarantee for the unexpected losses. So we can decrease the perceived risks and make the risk and return analysis, make sure that the return is going to be bigger than the risk that is going to be taken. And from an investor perspective, we are shareholders and sometimes, we're sometimes shareholders and we usually give loans. But if we give a loan or we're a shareholder and we know that this institution has a guarantee, it gives us a lot of comfort. we think, okay, there's a guarantee in place. This financial institution is not going to have extreme losses on this portfolio serving refugees. So it makes it easier with the approvals. The shareholders sometimes have to approve business cases or strategy changes. And if we know that the guarantee is in place, there's more likelihood that an FMO or other shareholders will approve this. Lastly, I just want to say something about our product. It's Nasira, and we have 20 guarantees in place, but none for refugees or IDPs, mainly for females and for the youth. And I do think this is because what we have mentioned earlier in earlier sessions as well is because FMO really looks at larger ticket sizes, and the portfolio to refugees hasn't been large enough for us. Also maybe costly, but the cost is of course dependent on the risk that is being taken. However, in the guarantee that we have, Nasira, it has been used 4 times of the 20 investments that we've had, and we guaranteed 500 million loan portfolio. So just to wrap it all up, our Nasira product has not yet been used for refugees. However, I do believe that, for example, the EBRD and other guarantee providers can help in developing this market further. Thank you.
Thank you very much, Anula. And now to close out this first round from the side that is proposing for the case for guarantees, we'll have Noah from Opportunity Bank International.
Thank you so much. I'll stand because
Yeah.
and that means I have one extra thing for me. So let's pause for a second and put ourselves in the image or foot of a financial service provider from a developing country like Uganda that does really want to extend financial services to the refugees. And they know that their services would complement the humanitarian assistance, the resources, the funding, which you all know that are actually reducing. But they also know that the market that they are entering, serving refugees, is new and it's not as the normal market for the nationals that they serve. In my view, I believe guarantees are very, very important in this way. 1, guarantees do provide additional collateral to who we call trustworthy customers, the refugees, we all believe they are, that would otherwise not have an opportunity to access facilities or loans because they don't have the collateral, they don't have land. All of you who raised up your hand saying that refugees are trustworthy, how did you know that they are trustworthy? Someone gave them a loan. Yep. And if we don't facilitate financial service providers to provide that first loan to the refugee, we will not know that they are as trustworthy as the host communities. Remember, there is no discrimination. They don't have land. They don't have asset that the nationals have. My next point is around guarantees act as a catalyst to financing refugees and by encouraging further lending even after the guarantee expires. I would give an example. Florida, one of the refugees that Opportunity Bank has served in Akiva refugee settlement, received her first loan through Akiva guarantee and set up a restaurant. The guarantee expired, but because her credit scoring was good and she had paid the loan very, very well, she came back for another loan that was given to her without a guarantee. She has opened up 2 branches of the restaurants, and she's employing over 10 employees. Most of them are refugees plus 2 nationals. Would these have gotten a loan if she had not been tested? If she didn't get, would these have gotten jobs if she had not had gotten a loan through a Kiva guarantee at the first time? By the way, she's still opening up other restaurant branches. My last point is around, let's think about climate change. It's no longer news that we are all affected. And in this case, guarantees serve as a lifeline for financial sustainability of the lending products. We have a client in Nakivari that he's called Mitima. He's a poultry farmer, a refugee from DRC. Because of heavy rains, all his chicken or the poultry were affected. The building collapsed and he lost 10,000 birds. He had a loan from Opportunity Bank of $2,500, and we ran to the guarantee fund to cover part of the loss. He got another loan. He's now running his business again. Where would he has gone to if there was no guarantee to cover part of that loss? Would the bank give him another loan? We all know the answer. As I conclude, we all believe that funding through humanitarian organizations is reducing. We need to empower the private sector, the financial service providers, to get to test their products. And guarantees is one of that approach that would help them get into that market, sustain their services. Even when there is no more funding, the banks will still be in these communities serving refugees. Thank you so much.
Woo. Good job.
Thank you very much, Noah. And I think we can all see that our debaters are taking this extremely seriously, extremely passionately. Before we open up to the audience to vote our winners, we'll give a couple of minutes for each side to make their final statements and rebuttals. So Philippe, over to you. We've heard cases from each of them with regards to why guarantees are needed. They're needed for de-risking, they're needed for innovation, they're needed for lending in this space, especially the perceived risk angle.
Well,
Final comments.
I was not convinced. No, I mean, okay, fine. Fine to say the guarantee was useful 10 years ago to show that, okay, it was a difficult market, blah, 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 blah. Now, I mean, Eva, the foundations, people on the field, they all can show that it's not that risky. There's a risk, why not? But it's a risk with all type of partners. Why you're talking about this refugee that lost, that's the problem for all the other partners. Do they all have guarantee? No. Do they still go on? Yes, because we know it's part of the risk. It's a portfolio at risk that will be 1, 2, 3, sometimes 11%, then it goes back. It's part of the business. If you don't are able to do this and take some risk, then of course, don't do the business and do something else and help to the rich people in Luxembourg to get access to loan. So I think that here the issue is clear. I mean, we have the proof that it's not that risky. And I say the message is what? The message is to say, guys, look, we can go there, we can do it. And then it works. And that's what is very important. And if we want to be able to reach people, and we have to break this risk perception, we have to break it. And the only way to break it is to prove that without a guarantee, you can serve these people. The risk is not as high as with other type of clientele. And that's why you should do more, and that's why you need to do more. And that's the main arguments I have. Otherwise, I think that, okay, we're still back like 10 years ago, and okay, I had some hope that the sector has evolved and that we can use our own experiences and concrete data to prove it that it's not that risky.
Yes.
Go ahead. Go ahead.
Financial inclusion is not only about risk. So it's about inclusion, having more and more, even if they are not risky to start with, we need to include them. And as I told you, in Jordan, till now, we're the only financial institution that gives access to refugees. We would like to see more and more. It's not an easy thing. Why they are creditworthy? Because we did the exercise in an excellent way. We added measures. We didn't use the guarantee and to lay off and relax our credit evaluation. No, we added layers. We added a champion to go and call this segment because we have a reputation. We wanted it to succeed. We have a mission. We want to reach to the segment in a good way, in a correct way. And actually, having the guarantee to do so, it has impacted the livelihood of those people in Jordan. It has pushed the whole ecosystem, including Central Bank of Jordan, to have regulations for them. E-wallets have followed also that after seeing them, they are taking loans. It gives them access to e-wallets as well. So we feel very happy that we enabled all these players to consider them. But we couldn't start without guarantees. We couldn't continue because, again, it's a gradual journey, similar to microfinance. 30 years ago, we were only given group loans for only 300 JDs. Now we're giving loans with for individual lending. We're close to SME. So also refugees' needs is increasing. Now we need to go to more individual lending to them, and we need guarantees to scale now, to scale to refugees, to give them for other purposes, for green energy, etc. To go to this scale, we need guarantees. So again, it's not harmful unless used to the wrong institution or in a wrong way. It should stay an available tool, talking about financial inclusion, among other tools to be used in the correct time to the correct institution.
Cool.
Sorry, it took all the time.
No.
Do you have any final remarks?
Maybe just one remark then, and that's from a point that you said earlier that if there's a guarantee in place that the financial institution might give out loans more risky, right? And that they're going to be like higher par levels, NPL levels. You can actually have different types of guarantees, right? You can have a first loss guarantee or second loss guarantee or pari passu. And all of these different types of guarantees, they play with this thought, right? You can have that the financial institutions takes the 5% first loss. And for example, the guarantee program takes a 95% loss. So I think there's a lot of space for guarantees to work in a way that could work for the financial institution, for them to dare to enter this market. And I definitely agree that there's a lot of research out there that shows indeed these refugees are as creditworthy as other customers. However, every institution, there's still perceived risks and there's still a hesitation to enter this market for various reasons, which if you look around that maybe in certain countries are still there.
Great.
Yeah.
Last comments, and I think this is a sign, Philip, that you should take positively that they each want to have a final remark. But go on now.
Yeah, so for all of us, we've talked about guarantees, and we actually, looking at the money bit of it. But let's look at a bigger picture here in the face of a financial institution. Whenever guarantee is in place, there are a lot of other advantages that come alongside it. The technical assistance to the staff that are managing this, the checks and balances within the financial institution, like thinking more widely, kind of broadly on how they can improve the services to the refugees. And let's not look at the money and the risk only, but let's look at how is the institution being also built and supported to grow the work that they are doing? And this is very, very key because it's attached to the guarantees. So while refugees are creditworthy, we all know that. We are also looking at how do we increase the appetite of the institution, how we're building their capacity for the staff, how we bring in other financial service providers that are not serving refugees. In Uganda, it was, I think, Ford and then Opportunity Bank that started serving refugees, and would be in this conference and they ask us, how do you do it? How is it possible? And then we share the experiences. Now, other institutions are taking on that work. And you see, we opened the doors, we increased the appetite. And so I think this is very key when we are discussing the guarantees. Thank you so much.
Thank you very much. If you can give a big round for each of our debaters. So we've heard both sides of the arguments. It's now up to the audience to decide our winners. Do we think guarantees are needed to unlock financing for refugees, financial inclusion, or do we need different approaches? So if you can take a moment to vote, and then we can open up for broader discussion.
He will vote for us.
The way you phrase it.
He used to vote, huh?
Yeah. So we're not done yet. We'll give it another minute.
Come on, come on, come on, come on.
I think it's
I provide you a guarantee.
I think the phrasing that we need different approaches additional to guarantee is
Yes.
something, and
Yes.
stopping it is
Yeah.
another thing.
And I think as sort of the voting happens, just as we wrap up, and of course, I think we definitely need more time for these topics. The reality is that this kind of question is not black or white, right? It's more complex, as everything in the world is. And we need to think about ways that we can nuance this. I think the speakers touched on this already, and we're seeing this in our work around guarantees, around blended finance, around how we can really make things catalytic. There is, yes, a role for guarantees, but I'd argue that there's probably a role for other blended finance instruments to come alongside that to make those guarantees more effective.
Sure.
And so maybe now just to open up even from the audience to hear from anyone who wants to share their experience with guarantees, how you think guarantees can be made more effective, because that's going to be really important. Maybe first to hear from, Shafi. Oh, sorry. I think we need the mic, yeah.
Thank you very much. Uganda has been using guarantees for a very long time, especially from Kiva. And I just talk about especially financial inclusion for refugees. When we wanted to start lending to refugees as a regulated institution, we had to seek approval from Bank of Uganda. And when we sent in our request, the first question was, how are you covering credit risk? So we had to engage Kiva, and they gave us a letter of comfort, which we submitted to Bank of Uganda. And it is from there that they allowed us to pilot test lending to refugees. We pilot tested, and then we went back to them and says, look, these are the results. Please, we want to scale. And they opened up. And then, of course, there was also the issue of the ID. We had to also seek the approval because the ID, refugee ID, was not listed on the Credit Reference Bureau. So again, we had to write to Bank of Uganda. And of course, given the fact that they had that comfort for credit risk, they approved. So we are happy that now the refugee ID is now a recognized document for any refugee anywhere to go and open up a bank account, not only in Uganda, but everywhere. So, and of course, the guarantees to work, you don't have to notify the customer that you are under credit guarantee. Otherwise, they will not pay. So I think there's that element of confidentiality between the institution. The customer doesn't need to know that they're under the credit guarantee. Another example of the guarantee is we all know that women, maybe in developed countries, but in Africa, women don't own property. But we have to lend them money. So what collateral do we use? So that also gives comfort. And then I will give another example of agriculture. Currently, my institution, over 65% of portfolio is in agriculture. So we had to go to guarantee, ABI, and that has helped us, motivated us to even grow the agricultural portfolio. And I think one of the presenters mentioned about the expected credit loss. So at the end of the year, if you don't have any guarantee, it means that that customer, you have to provide 100%. So the credit guarantees help the institutions even to be able to demonstrate that they are profitable, because the expected credit loss can be able to reduce their profitability. Thank you very much.
And I just want to add, everything that Shafi said about Kiva is true. The only thing I would clarify is that we don't look at it as a direct guarantee. Because Kiva.org is funded by individuals putting in $25, that risk is transferred from Ugafode to them, but it's not a straightforward guarantee. So the question, I think, said something, is there another way? Perhaps Kiva is one of the other ways. And now we're lending with the Kiva Refugee Investment Fund with no guarantee at all, not just to Ugafode, but to institutions that have never lent to refugees before. So we were seeing that there is a way to lend to refugees without a guarantee as well.
Thank you, Liv. Let's make things very concrete.
I think we have a couple there.
Thank you. My name is Yengelo Kule from Rufi. I am neutral because I think we are the only MFI in Uganda who are not using guarantees.
No, vision fund.
I don't know. Said I think. So for us, for all our loans, we have not used guarantees. So I'm not going to say they are good or not, but then there is one aspect that when we're doing guarantees, I think, like Shabi mentioned, even if the client doesn't know, even the field officer should not know. Should the field officer know, then there's a possibility of actually having a far bigger appetite to give the loan than if they knew there was an guarantee. So if it remains at the top, without even the officers knowing that this loan is guaranteed, then it may work. But then I've had two experiences because we also operate in South Sudan. And then two funders actually, because they gave guarantees to banks to guarantee loans for agriculture. And they performed very badly. And then they said, from now onwards, no guarantees. So it seems like either the banks just went wild because the money was there to guarantee part of it, or the clients got to know that this is a guarantee. So like our colleague at Opportunity Bank said, unless we are really very careful, we may actually also burn ourselves with the guarantees. So it's two ways. That's why I said I'm neutral.
Yeah.
Thank you.
No, thanks. I think you said it well. We have time for maybe a couple more final audience remarks, and then we'll get closing remarks from our panel.
Okay.
Okay.
Good afternoon, everyone. I'm Bindi from Grameen Foundation. I thought the debate was very interesting, and it's even something our donors are asking us about every day. So I had to come to this. So I had a few different comments. We also, I mean, we support guarantees as well. But the thing that I have seen is we support guarantees and we do other work that doesn't involve guarantees. And I do see that a lot of guarantee funds, maybe not Kiva, but a lot of guarantee funds are not attuned to the needs and constraints of smaller financial institutions. ENG says it a lot, that are actually the biggest risk takers and who are already lending to refugees and other higher risk populations. Yeah. They're generally attuned to the needs of banks, small and large banks. And, you know, actually in the long run, many banks are not going to have a sustained operation in a highly rural, hard to reach area. So why are we attuning our guarantees to banks? Can we adjust them so they're better suited to the needs of smaller institutions? I also wondered if it was a good use of resources. Well, no, I think it is. So there's a lot of different financial instruments that you can use, but there should be some resources should be for guarantees, some should be for blended finance and other things like Reza's mentioning. I also, in all of these discussions we've had around refugee financing in the past, 2 days, I feel like a lot of people are congratulating themselves. We're all congratulating ourselves on our great work reaching refugees. But at least in Uganda, I don't see many. There's just a few startup capital loans for refugees. And yet most refugees just arrived in countries and they don't have existing businesses. So this is kind of a gap in the financial services we're providing that could be resolved, that could be de-risked through guarantee funds.
Thanks. My name is Paul, once again. I want just to disagree because I've been working with with financial institutions that are using guarantee. And I knew that from day one. I'm a refugee. And the team that are in the field, my team, they know that the approach is that they are using guarantee, but it doesn't affect negatively the implementation of this. The Yuga Ford is there, Opportunity Bank and others, the ones we are working with them, they know. And Kiva, we know that Kiva is given that that guarantee. So yes, okay, yes, but just what I wanted to say is that I think we should support the guarantee because one of the challenges to access financial services is that a refugee, comparative to a national, for instance, when the national, when they are planning already to go to the bank for loans, they already know what are the requirements. And as one of the people here said, they have already sometimes the collateral that might be the land, but for a refugee, it's hard to get that guarantee. And if, as Kiva and other partners, financial institutions locally who are working with us, they can make sure that the guarantee are being used to back up. Yes, that's a great way to go. Thanks.
Great. One final point. Oh, sorry, Swati, and then at the end there.
I think I've been shuttling between pro and against because the arguments from both the sides were really very good. And what I wanted to bring to the discussion is that we talk a lot about perceived risks, and some of those risks are clearly flight risk and the risk because the refugees don't have collateral on the basis of which the loans can be given. I'm just thinking if these risks are actually a reflection of the barriers that refugees face in establishing themselves, like in ensuring their financial stability and stability of their livelihoods in the long term. So while guarantees are a good short-term solution and a good market-led solution, I'm wondering if with that, we might miss on actually fixing some of those barriers that are preventing refugees from, that's preventing refugees from overcoming those, perceived risks, which is being able to build up assets and being able to access the right IDs and documents. Yeah, so yeah, that's what I wanted to comment upon. Just going back to really the foundational inclusion to make sure that we don't miss out on that.
For sure. Yeah, it's not a silver bullet. It's not a band-aid. We need to look at things holistically. We need to finish soon. So I think the boss.
Just very briefly, Benedict Wada from Consumer Centrics. Supposedly financial intermediation is about risk management. Risk management is all about data, long lines of data, massive data if possible. So ideally, guarantees can move financial intermediaries to collecting new data. Now, my question, and I might really just not be aware of that, is there something like the equivalent of meta studies that are done in medicine for the use of guarantees, that the donors who have pushed guarantees are sharing data, are slicing and dicing it to tell us which segments in which country, what are the patterns to look for, where bankers can more safely than they think they ought to expand their activities? I would love to see that, because as a consultant in inclusive finance, it would make my life so much easier. I've seen what the Financial Alliance of Women and the data that I've made available has done for our job. I'd hope that with guarantees, we can get the same job done for refugees, for youth, and for others.
For sure. And just very quickly, I think this question that we're asking here today is not actually only for refugee finance. People are asking this in smallholder finance for agriculture, for healthcare. Do we still need guarantees there? And I think it's a really important piece that all of us need to be asking as we go back to our work. Is guarantees, it needs to be used more as a means as opposed to an end. We need to be thinking about sustainable market building. We need to be thinking about how we're really solving root problems as we're using guarantees to get to that much
And-
more
yeah.
holistic ecosystem.
Yeah, but
Go on.
I agree. Part of it is learning. So I do believe internally when the board told us go and learn more about the segment learning because they are ambiguous for us. We don't know. We have perceived risks, barriers, as said, but the guarantee internally, the internal guarantee allowed us to learn more about them and then to design suitable products for them. So there is this important part.
Yeah.
But I would like to say that the question is misleading a little bit because I'm with having guarantees available, but still to think of new approaches also to support any segment we would like to serve.
Yeah. Any final remarks from any of the panel? I know we have the buses waiting, so we need to.
Yeah, I mean,
wrap
no,
up, but-
I like very much what you say. I mean, I don't know your name from Rafi, but I think what is very important is to understand that, I mean, okay, guarantee could be useful and but I think it's very important, and I believe that, and that's why we wrote a blog with Mikkel from the UNHCR on a paper on this, and we said, I mean, because okay, guarantee could be fine, but I think what is more useful is all what you can provide in terms of TA, in terms of training of the staff, in terms of working at the advocacy level for the ecosystem and so on. I think it's much more useful if you have limited funding or whatever. It's much more useful to use this for this type of support, helping UGAFO to open its branches in Naki Valley, helping Vision Fund to train their staff, helping to translate. I think it's what is very concrete and what is needed first. Then, of course, if you can get a guarantee, why not? I think it's not the main point.
Yeah.
I think with that, we've got to, a good, thank you, everybody.